capitalizing on a market leadership, up 23%. We talked about the market share gains. Rajesh will talk about the new launches and the continued margin expansion that we're driving. Both Tech Mahindra and Mahindra Finance contributing well. TechM coming off a low last year, the same quarter, up 2.5 times. Mahindra Finance up 36%. And our growth gems with the 5x challenge have grown significantly in this quarter from a longer term growth perspective. We don't look at profit for that quarter to quarter, but even from a profit standpoint, it's grown 72%, excluding a gain that we had for Techo revaluation last year. The thing I'll highlight here is our renewables business, Sustain. We had laid out a plan to add 1 gigawatt every year for the next 5 years. In the last quarter alone, we've added close to 1 gigawatt. And that business is on a very strong track right now. Diving a little deeper, the auto business, I'll focus on the capacity part here. It's at 54,000 units a month, up 10% versus March. Again, as promised, we closed last year at 49,000, which we had outlined, and we had talked about going to 54, which is what we've done now. The profit there is 1,423 crores. From a farm standpoint, we've seen volume up 4%. We're seeing an uptick in rural sentiment, and Rajesh will spend again more time on talking about what we see and what we expect as well for the rest of the year. Strong execution and profit after tax 800 crores. Yes, there are some challenges in international there given a lot of the market conditions in different markets, but those are things that we see as shorter term issues and then things that we will work through. Mahindra Finance, I talked about asset quality continuing to be strong. Disbursements have declined 1%. And this is one that doesn't concern us because our focus has been on maintaining strong asset quality, working with customers where we feel that we can manage that well. And growth is inherent in this business. It will come. Our assets under management have grown 20%. And for us, it's more important to do the right thing to grow the business the right way. And yes, in some quarters, we may see low disbursements, but that's part of how we will grow this business. We're looking at expansion into the mortgage business to help our diversification agenda, which is one that we've talked about in the past as well. And again, you see a healthy profit growth here at the Mahindra Finance. Tech Mahindra, mixed demand outlook, overall positive, but there are some areas where industry demand is a little muted. BFSI deals have been a good win for TechM, focus on margins as I talked about, and here again, as I talked about earlier, profits up 2.5 times. A little deeper dive into our growth gems, logistics. We're starting to see some uptick in volume across the industry, and that's starting to help the logistics business. Cost efficiency initiatives are underway, and fully integrating the Rivigo acquisition for Express, which has been a drag in the past, but we're starting to see things turn around there well also. So you see revenue up 11%, EBITDA is up 40 basis points there. On hospitality, business is doing well. Occupancy is at 77% flat versus last year, but this is despite a higher room inventory. The average unit realization is up, and we are seeing some softness in Europe for the holiday club business that we have. But overall business is on a good track. Real estate is actually on a very solid track. We are starting to see significant growth there, both in terms of profitability as well as land acquisition, which is something that will drive future growth for that business, and a healthy pipeline in our industrial cities as well. And with some of the recent government announcements, that opens up a new vista of growth for this business. So I'll end by saying we continue to deliver on our commitments. ROE stays above 18%. EPS growth continues to be strong. As we look at it from F22, which we had promised, it's 40% compounded annual growth since then. And let me then hand it over to Rajesh to have him talk about what are some of the key things that have driven this performance. Rajesh, over to you.
Hi, good afternoon, everyone. Let me just build a little bit on how the farm business is done and talk about that to begin with. Uh, we've seen that the volume has gone up 4% and exports have gone up 27% for Q2. The good story here is the gain in market share, which we've seen consistently, and you'll see that on the next chart as well. This has been our highest ever Q2 market share, but that's got followed up with a very strong October market share as well in tractors, where we've got a market share of 44.5%, taking our cumulative for the year up to 43.9%. So we're showing very strong, consistent performance in the marketplace. Some of it is coming out of what we've done with OJA, which has added market share in the segments in which we were weak, which is the up to 20 horsepower and then the 20 to 30 horsepower as well. We, of course, won some awards at the Tractor of the Year category, so just flashing that. Farm machinery has shown strong growth. We've been expecting more growth, and there are many things that we are doing to enable that, and we hope to start seeing outcomes of that. One of which is a new Swaraj harvester, which has just gone into the market. So we are hoping to start seeing greater growth as we move ahead with the farm machinery business. Also, as we're seeing the revival in the agriculture farming market as well. These are numbers you've seen earlier. The PBIT grew 6%. Anish did talk a little about the drag that we are seeing in some of the international markets because of global slowdown. There is an exercise on that we will go through during the course of this quarter to take a look at each of the subcomponents of the business. And when we come back a quarter or two from now, we'll probably share a more holistic set of actions that we may take on our FES international businesses. The farm margins have grown very strongly along with the market share. So you can see we've gone up to an 18.7% core tractor margin. As many of you know, Q2 is a relatively lower volume quarter. And so, the 18.7% margin has to be seen in the context of it being a relatively lower pre-season quarter. We normally show you this slide to show how we are able to keep our margins on track irrespective of the industry growth rate and the volatility that we see out there. We are seeing some really good revival of the rural markets and rural economy. The multiple factors that are there, of course, the rainfall being above LPA and large parts of the country being covered very well. The reservoir levels going up is a very significant enabler, so that's in place too. Farmer terms of trade continue to be strong. And the increase in government spends we've started seeing from August, September in rural and agri both is another key enabler which we are seeing help the rural economy and the tractor market in particular. So we put out a number for the second half of the year, which we expect to be between 13 to 15% as the H2 tractor industry growth. We're talking about the industry, not our growth rate. Coming to automotive, the SUV volumes have been very strong, much faster than the rate of market growth. We've grown at 18%. If you remember, we've been talking about a mid to high teens for our SUV portfolio for the course of this year. That's translated into a strong growth in revenue market share, but the volume market share growth has been as robust. The LCV industry in the Q2 continued to be under pressure. We have seen some green shoots through the second half of October in particular in this segment. And we kind of correlate that with the pace at which mandi arrivals are growing, because that's an enabler to the LCV less than 3.5 ton industry. In the second half of this year, the mandi arrival of this month of October, mandi arrivals actually went up by about 20%. And we believe that that's a good revival sign. One of the things which has impacted the LCV industry through the course of the first half has been the damage that's happened to fruits in particular, with delayed rainfalls and excessive floods in many areas, and that correlates a lot with the LCV 3.5 ton industry because there is a movement there. So we're seeing that kind of come back in place now that that phase is over of crops getting kind of destroyed. And we're beginning to see early signs of the LCV industry picking up in the second half. We've had three launches during the course of the first half, the 3XO, the Thar Rocks, and the Vero. Vero was as late as September. This just captures the movement that we are seeing on SUVs, on market share, both volume and revenue, both of which are growing. The volumes and the revenue market share, both of which are growing. The Thar Rocks launch was a really exciting launch. It got very strong views, and these are all organic, 1.3 billion video views of the content that went out, and 5.1 million website views. And of course, as you know, we opened to a very, very strong booking number within the first 60 minutes. This captures the trend line on LCVs. As you can see here, again, the LCV market share has continued to go up. And we've launched the Vero. It's too early to call out, but initial response and the feedback has been very good. It is a product, the high end of which we conceptualize saying, while it has all the benefits that a commercial customer should look for, why should a commercial vehicle customer not have a more car-like experience? And the top-end variant of that comes in with multiple things like infotainment, much more comfortable seating, interiors, and so on. And we are seeing that there is a skew of demand to the top-end version, even in the commercial category of a product like this. These are two awards that we got as a part of the FADA study that was done, number 2 in all the automobile category on after-sales experience, and also number 2 on dealer satisfaction. The last mile mobility seen very good EV penetration. In the quarter, the EV penetration has gone up to as high as 20%. So it's actually the fastest penetrated EV category. We continue with our market leadership, and we've also launched a 4-wheeler electric product towards the end of the quarter, which is called Zeo. We believe that there is a very good upside. The TCO compared to the equivalent ICE version is about 25% better, and it is a 18 to 20,000 per month segment, which right now has very little EV penetration. So we do hope that this will be another strong volume driver for us as we go forward. The auto consolidated numbers reflect a 36% growth in the PBIT, absolute number taking us to about 1952. The margins, we believe, have been very good. There were questions around, whether we will manage margins in the context of new launches, some price adjustments that we did on 700. I think we tried to explain to people that we know what we're doing, and it will not have a financial impact. And that's played out in the way the volumes have revived, while we've protected a very high level of 9.5% margin. Coming to my last slide, we're ready to get going with the newborn electric launches. We are now calling it Electric Origin. The reason we call it Electric Origin is these are the first Electric Origin products that we're going to see here. These are created ground up. We'll of course talk more about these on 26th and 27th, which is when we do the event in Chennai. And we remain very optimistic because we think that these are really wow products on multiple dimensions. So I'll just leave you with a quick teaser before I hand over to Amar. Thank you.
The next Indian icons, beating everyone on the globe. B6E and XEV9E. Mahindra's electric origin SUVs. Catch them at Unlimit India.
We're very excited about the BEV launch. So just to sum up everything you heard today, strong revenue performance. You heard about the very strong growth in volumes in auto. That, of course, was the leading segment within our 3 segments in terms of revenue growth. We did see farm being a bit muted. Domestic was up, but then international subs were weighed down by what's happening on the macro side there. and services was up as well, primarily driven by Mahindra Finance and TechM growth. But I also wanted to call out that Mahindra Accelo and logistics also had strong revenue growth. So overall, revenue contribution came from many parts of our business. That's translated to very strong profit growth. As you can see, 35%. Anish already called out that it's 22% x the land sale profits. When you think about that 22%, it is led again by auto, but there's very strong growth in services as well. So farm was flat, and when you think about services was up 78%. So a lot of growth in services profitability, which is what you see on this chart here. Now, when you think about how to think about this in the future, while we give no guidance as such, you heard some of the commentary, we hold to our estimate of high teens growth in volumes in auto. We feel good about the second half in farm with the strength we are seeing in the farm sector. You should be aware of two things that we need to work through. As Rajesh mentioned, one, on the auto side, we do have the BEVs launching. We launched the ROCks as well. So there'll be some temporary kind of impact on the margins because of all of these costs that we will add. But as I mentioned, these are temporary. And on the farm side, we will take a critical look at our international subs and come back to you if there's something substantive that comes out of it. On the services side, we should see the traction that we saw in the first half. Mahindra Finance should see lower credit costs in the second half of the year. TechM should continue on its margin territory. So overall, we feel good about the trajectory that the group is on for the second half as well. Beyond this, I did want to call out in the standalone performance, there was a gain from land sale. This is the Kandivali land sale. But despite this, the results were extremely strong. Please bear in mind, last year, we had a one-off gain from the transfer of the last mile mobility business into subsidiary status. So on a like-to-like basis, the 200 CR of gain last year gets offset by the 200 CR of land sale. So it's still extremely strong performance from the AFS business in particular. And then cash. This is something we talk about every 6 months. Just want to highlight that cash grew again in the first half of this year. Despite, you can see between CapEx and the meal investments, this is almost double what we would spend. We also had higher dividends, and that's basically why we had cash grow, is the stronger operating cash performance. Our debt levels are also now at historical lows, and because of that, the borrowings and finance costs also are significantly lower than what you've seen in the past. So overall, cash performance should continue to be very strong for the group. Okay, with this, I'll wrap up and we'll take some questions.
We'll now take your questions. Kindly introduce yourself and the organization that you represent, followed by a question. Okay, Tushar? Yeah.
Hi, congratulations on the results, Dr. Shah. Anurag Joshi from ET Now. Rajesh mentioned about a revival in mandis. Okay, so what impact do you see on your farm vehicles, tractors for the rest of the year? My second question is on Club Mahindra. How do you see demand this year? I mean, tourism is booming in the country. How is that impacting on the revenues of Club Mahindra and overall in the consolidated revenues for the year? What will be the impact?
Rajesh? Yeah, to the first question, I think I mentioned that the first half of the year for tractors was almost flat. It was like 0.6, 0.7% kind of growth for the industry. We expect that to move to a 13 to 15% growth in the second half. So we expect what we're seeing on the ground right now, I listed out multiple factors, one of which was improving arrivals in Mandi. We expect to see all of that lead to a 13 to 15% growth in the second half.
And Anurag, on Club Mahindra, we do see a continued level of buoyancy around travel. Occupancy rates for this quarter, which really did not include much in terms of holidays, was still at 77%, which is very strong, same as what we'd seen last year. And in terms of overall revenue for the year, I'll leave that to the Club Mahindra business being a listed entity. I don't think we've really given guidance for that for the year, but I would just basically say we continue on a very strong path.
Yeah.
Good afternoon, gentlemen. Tushar here from NT Profit. Congratulations on those numbers. Mr. Shah, first a question to you. What is the outlook for the second half of the year for the automotive business? A larger rival has pointed out that the growth will be at 3 to 4% rather than, as CM predicted, 5 to 6% earlier, much earlier in the year. Would you be posting industry beating growth, or will you be in line? Mr. Jejurikar, what was the inventory situation as well as the festive season performance for you? I mean, it's 55,000 plus units that were there, but how is the inventory situation standing at this point of time? And with the BEV launches coming up, is there any additional capex that will come in apart from what you have already specified at the beginning of the year? Mr. Barua, hi. What explains the EBITDA surge? That's about 140 basis points for the automotive business despite the launches. Where have we actually earned the margins? Thank you so much.
So Tushar, I will just say one statement and then I'll let Rajesh cover the rest of that question, is that we should always be posting industry beating growth. And on SUVs, we have been for a while. So with that, Rajesh, over to you.
Yeah, so on your first question, Tushar, on how we will do, we maintain our guidance of mid to high teens for the full year. We're not increasing that number because the second half of the year we did have a much higher base. So, we had already started seeing all the benefits of the volumes that had happened. So we stay with the mid to high teens for the year, which means for the year and hopefully in the second half as well, we will be ahead of the industry. So we do intend to continue to grow at that pace. Your second question was on our inventory, and I'm assuming you mean dealer inventories. We had a very good festival offtake, and our inventories now are way below 30 days at the dealers. Our offtakes were much higher than the billing that we did, and we did mention we have a few extra days of stock. That's all gone, and we are way below 30 days. On the third question was related to Born Electric related capex. So there's no change in the capex numbers because that was all factored in. But Amar in a way alluded to that. So we will start seeing some depreciation start coming in. That's in a separate company, which is a subsidiary company called Mahindra Electric Automotive Limited. So we will, as we start production, we will start seeing some depreciation. We'll also start seeing some marketing expenses start showing up. So we will see some effect before the revenues actually start, because we'll start selling that in quarter 4. So we will see some of that in quarter 3, but there's no increase in the capex.
I think it was not mentioned in the presentation.
Yeah, I think we mentioned last time that we'll stop showing that slide because it's not relevant anymore. Like I said, it's been a healthy throughput, and right now we do have the Thar rocks as one of the areas where we have to kind of grapple with the demand that's higher than the supply at the moment.
On EBITDA, actually, it's multiple factors. So number one is, of course, the volume growth that you see year over year does give us a lot more cost leverage. Number two is, even though we did have some models where we had price reductions for strategic reasons, the year over year price is actually up, right? And it's helped also by material costs being fairly benign throughout this period. That's offset partially by negative mix, because we do have the 3XOs mix going up within the overall mix, etc., etc. So it's purely operating performance, the EBITDA. There's no one-offs or anything else. It's just as we get higher volume, as we get more efficient in the way we produce, as our automation kicks in all of the plants where so much investment has gone in, just becoming a lot more efficient than we were.
Dr. Shah, you mentioned about some challenges internationally, which are temporary, of course. Could you elaborate on that point, please?
Yes, the US market has seen a lot of decline overall over the last 2 or 3 years due to a number of factors there. This is the overall tractor market in the US. In Turkey, inflation continues to be very high, so accounting has to be done based on a hyperinflation guideline. So these are some of the things that we see internationally.
Yeah. So US, like Anish said, has seen the market has seen a huge decline from a level of 3 years back. We're talking about the market we play in, which is the less than 100 horsepower category of tractors. Market was about 300,000 plus, which is now 180,000 on an annual basis. So huge decline in industry. We expect that to come back soon. So we believe that's a very strong business opportunity for us, and we will see growths come out. But right now there is been a temporary slowdown with interest costs having gone up and kind of, let's say, political uncertainty that was prevailing in amongst the customer base as well. Anish spoke about Turkey, and then one of the businesses that we are looking at more closely is the harvester business in Sampo, and we'll study that more closely.
Yeah, Amit.
Hi, Amit here from Autocar Pro. Sir, if you could just give us a window into the future in terms of your the PME drive business. The PME drive has come up with a lot of incentives for trucks and also for electric ambulances also. So is there a journey towards electrification beyond SCVs and electric small commercial vehicles into larger trucks? And a little bit if you could explain about your journey.
At this point, Amit, we have no immediate plan to do any electrification on our truck business, but we are evaluating different different fuel type options and see which is the best way to go. But we've not triggered any program at the moment on the truck business.
Anyone else? Yeah, Alisha. Hi.
Big trucks. Amit, you're talking about big trucks, right? Yes. Not the LCV, because that we've done with. Yeah. I'm talking the larger one because yeah. Yeah. Yeah.
Hi, good afternoon. I wanted to understand, has there been ASP growth year on year for the auto business despite the price cuts? And can you talk about that, what it was this year, this last quarter?
Do you mean by way of net revenues, or do you mean by way of actual price increases?
Actual price increases?
Actual price increase has been negligible in the auto business in the first half.
And the ASPs particularly?
The net revenue per vehicle, if that's what you were looking at, from Q2 of last year to Q2 of this year has actually gone up by about 10% or something, I think. About 9-10%.
This is what I was talking about when I was talking about the EBITDA impact being driven by the volume and the impact of higher ASPs. Yeah.
Okay, taking a few questions online. Sabyasachi Dasgupta from HT Auto would like to know, we are introducing 2 new electric cars soon. How does it plan to adjust production capacity given the high demand for SUVs? He also wants to know about the pending demand for the Thar ROXX. What sort of difference has Mahindra seen in terms of demand for the 3-door since September?
Sabyasachi, on the BEVs, the capacity is by and large exclusive. So we've created a separate body shop, assembly line, all of that within the Chakan plant. So it's capacity which is exclusive by and large. Of course, over a period of time there could be some fungibility, but it is the new capacity over and above the 54,000 that Anish spoke about. So it does not interfere in any way with the current SUV capacity. On Thar, I think you have 2 questions. One is the capacity and the ramp up of for Thar ROXX, and the second is what's happening on 3-door. So, well, first let me take the 3-door question. We did see some kind of a slowdown in 3-door offtakes right after we launched the ROXX, but that changed very quickly, and we have actually sold out everything that we had on the 3-door ROXX by and large. So That too has seen very good momentum from middle of September, third week of September maybe onwards. Um, so right now, then answering the question more holistically on Thar capacity, we had said we have a capacity funds with some level of fungibility between the 3-door and the 5-door rocks, totaling about 9,500. So in phase one, we're going to improve the fungibility to be able to get more of Thar rocks. That we will do by January. In phase two, we will increase the number of 9,500 by a couple of thousand. And then we will look beyond that. We still don't have a concrete plan in place. At this point of time, assuming all of these tweaks, the waiting period for Thar rocks is between 9 to 15 months based on the model.
Another one online, Siddharth Patankar from Echo Drive is congratulating us on our performance. He wants to know what is the expected impact to your margin in the automotive business once you also take into account the cost of battery and other aggregates you would be sourcing for the BEVs in the coming quarters.
Yeah, I said that. Like we've said, Siddharth, in the past, since the electric origin products are going to be in a separate company, Mahindra Electric Automotive, we will call out our electric P&L separately, and we've said that over a period of time, the per unit margins, once we come to steady state level, will be comparable with ICE, but in the short, but they will never be the same in percentage terms. You will be able to see them separately because of the denominator effect. But on a unit level, once we get out of the launch phase, we would expect to see equivalent unit level margins. You want to add anything?
Okay. Aman Ahmed from Car and Bike. How many XUV 400s were sold in this quarter? What's the current production volume for it? And what will be your strategy for the 400 going forward, considering it isn't part of your electric origins family?
Yeah, so we're not doing great on the XUV 400 volumes. We sold 1,800 numbers in the last quarter. It is not something which we are prioritizing by way of pushing it to do more numbers or whatever. Our priority is to do more of the electric origin SUVs, and that's really the emphasis. So we will, there is a segment of people who value this product for its space and some other areas of strength, but that's not a priority. We're not putting marketing money behind it, and we will let it go at the pace at which it's moving.
Okay. Yes, Alisha.
My question is on how you're looking at EVs right now in this market. Is your stance a little bit more cautious than it was, let's say, last quarter? Looking at the global example, in Europe, with the impact of subsidies coming down in some countries, US, the growth is not, it's fairly slow as well. So the initial, and I think you've talked about a specific EV penetration figure by 27 or 2030. Do you stick to that? Or is there a sense of caution with respect to, how big of a market EVs are going to be, next few years?
No, actually, I'm even more optimistic than we were last quarter. So, because, we've had you've consistently heard us say that the market will start doing very well with good launches. And, as the quality of the product offering improves, there will be customers who will come in. We've seen a very good launch recently, and they're doing very good numbers, which is actually very encouraging. And we are actually very happy to see a good product get a good response, because the EV penetration in India is 2%. When we're comparing it with the Western world, it's already at 15%. They're seeing some kind of a stagnation after getting to 15% penetration. We are at 1 to 2% penetration. So we have a long way to go. And in a way, sometimes with things which happen outside, you reinforce your own belief system. And at least our own belief system is significantly reinforced that right products will create a huge opportunity.
I would just add that we have a lot of confidence in our products, as you will see.
Just a macro perspective, while everybody keeps talking about the EV slowdown, if you look at this past quarter and how Tesla and BYD did, that doesn't give an indication of it. I think the point is there is space for good products. And that's the point that Rajesh and Anish also emphasized, right? And I think the slowdown might be in just whoever is doing a mass production, undifferentiated product might be the one who's really struggling.
So just if I could follow up, even in the Indian market, despite prices being very attractive now, there isn't a lot of, lift in terms of sales that we've seen for products where prices have indeed been cut. So that alongside the fact that government subsidies, although on the fleet segment, have come down, so those sales are impacted. How do you weigh in, considering these facts in India? And also that, when you mentioned the, global scenario now, with, a Trump victory in the US, do you think that there is going to be some impact at all? There is every expectation that, tariffs on Chinese EVs in the US might increase again. Europe last week has been, thinking of something along the lines as well. So do you think that the Indian market will also get competitive now with the new Chinese manufacturers perhaps coming in? Just any view on that at all?
Firstly, we'll be happy if the market gets competitive. Good products grow categories, and we'll be very happy for good products to come in along with good products of ours, because it will help raise the overall level of penetration. So also to clarify to your earlier question, we've always talked about penetration of electric SUVs as a part of our portfolio. And at this point of time, we're not changing that. We don't play in the fleet, so government subsidies going down in the fleets and so on doesn't impact us. So we are playing into a certain segment, and that segment is we are hoping of people who want to buy really good lifestyle, high-tech experiences, and that's what we'll go out to deliver.
My question is for Rajesh. So you have a market share for the LCV less than 3.5 tons. That's more than half of the market share is with you. Do you see this position sustaining going ahead?
I don't think you would expect me to say no.
Yeah. No, in terms of competition in the future.
Competition has been there in the past too and is there today. Every key OEM who's in commercial vehicles has an offering in the LCV less than 3.5 ton category.
Okay, thanks.
There's, I'll just take one, Shaili, then after that you. So there are two questions, one from Sohini and Abhishek Banerjee. Sohini Das from Business Standard and Abhishek Banerjee from Money Control on the JV with VW Group. What's the update on it?
So the only update I would say on that is that we continue to look at various opportunities across our businesses, and only when we feel that the opportunity really makes sense for us will we have any further conversations on it.
Shubhangi Bhatia asks from ET Auto about the hybrid technology. You had mentioned that in addition to EVs, we will look at it closely. Any progress on that?
Yeah, so the view remains the same. We had said that, if at any point of time we feel our customer segments in which we play feel the need for hybrid technology, we would look at coming in at that point of time. So it's not a no, but it's not an active program. We remain committed to our electric vehicle strategy, and we believe that's the destination technology for the country and for us. That doesn't mean we will never do hybrids, but that's not the priority.
Shaili?
I just wanted to get a sense on the capacity on the ICE side, unless I missed that slide wherein what was the exit capacity at the end of Q2, and where do we see it heading in Q3? That's question one. And Dr. Shah, you mentioned about taking a critical look at some of the international subsidiary as far as the farm equipment business is concerned. So does it mean that you will take a hard, are you looking to exit some of the markets? You can just give us some details on that. Thanks.
So on the first one, I think Anish covered that, Shaili, which is we had said that we would be at a capacity. We were at 49,000. We said we'll add 5,000 more of capacity when we launch the ROX, which is what takes us to 54,000, which is where we are right now. the next lot of capacity addition will kick in now that we will start our electric origin SUVs. So that will kick in, and I think by March that will be about 10,000 capacity that we'll get ready. So that's the 54 plus 10. At this point of time, there's no immediate plan to add new ICE capacity except what I just mentioned on ROX, where we'll look at trying to increase a couple of thousand or more. Of course, at some stage in the next few months, we do need to take a cleaner sheet look at what capacities we need in ICE, given that we've had a very successful 3XO launch, which is doing close to 9,000 to 10,000 numbers a month, plus some very good export numbers beginning to come in as we have started exporting to South Africa. Very good response in some of the international markets as well. So we do need to do a clean sheet look at what else we need to do on ICE. But at this point of time, the ICE capacity is at 54 plus whatever we do on ROX, plus then the Born Electric capacity.
Sherry, on your second question on international, I'll answer it from a basis of principles overall. So we continually look at all our businesses, especially ones that are under more stress than others. Just because a business is in stress doesn't mean we will exit, because market conditions sometimes do create stress, and there's a long-term potential which is very strong in many of these international markets, and our businesses are very well positioned in many of these international markets. And if we feel that there isn't a long-term potential in any area, then that is something that we will look at as a candidate for exit. So as of today, we don't have a specific candidate for exit, but this is a analysis that we do on an ongoing basis, and as we do, we will come up with that.
Also, Rajesh, you mentioned about a 13 to 15% growth in tractors for the industry for the second half. So are you also revising the full year outlook for tractors? How much is it? Are you upgrading your outlook from what you told us last quarter?
Yeah. I mean, it's a mathematical number. So 5 goes to, the range goes from 6 to 6.8. So if it's 13% growth, full year is the 6, and if it is 15% growth, full year growth is 6.8. So in a way, 5 is what we had said last. We're increasing 5 for full year to 6 to 6.8.
Thank you.
Okay. Danish Anand from CNBC would like to know about our margins. What are the targets for margins for the rest of the financial year and overall FY?
We don't give out any margin guidance. As we talked about, there are going to be some short-term tailwinds and as well as things we have to work through. I mentioned those in closing. Just have to be mindful of those, but the business is on a good trajectory. So that's what we want it to be. And as Anish mentioned in his opening, we look for sustainable margin performance over the years, not just one quarter or other. So at present, we feel very good about the sustainability of the margin levels in these businesses, outside of 1 or 2 quarters where you might have a launch expense or you have something like that weighing it down.
Okay. Yes, please.
Yeah, Ritvik this side from Trucks Deco. I wanted to ask something about Mahindra Vero. It has already been launched in diesel and CNG variants, but when can we expect it to launch in the electric variant, since it's a multi-energy platform and the competition is already there in the electric 2-ton capacity LCVs?
Yeah, so competition is there, and we do have that comes through the last mile mobility business, which is the product we call Zeo. So that's the first four-wheeler which will take on one of the existing competitors. We have launched it at a very attractive price, which we believe will enable a strong penetration in the category. Vero 2 will have an electric product. We haven't yet announced the timeline.
Oh, thank you.
Hi. Congratulations on the results. I wanted to understand that there's a glut in capacity expected, whereas the mainstream players, including you, are sort of looking at capacity expansion. The industry forecast suggests around a 4% growth. So what is your overall future outlook when it comes to capacity glut? Is it going to affect? You've already mentioned your projections, but still would want to get an overall view on the industry. And also there's a slowdown in the pace of growth as well. So how do you view that?
I think the fundamental growth story for auto over a medium term, and when I say medium, I would say like 1 to 5 years, is going to be very strong. Many Western countries around in the world have actually seen a huge increase in the automotive penetration as road networks have got strong. That's one of the key enablers to people wanting to own more vehicles, because you actually start then doing intercity travel, which today people don't tend to do because you're not well connected enough, or it takes way too long. The passenger vehicle penetration in India is single digits still, way away from as a percentage of households, way away from what it is in most other parts of the world. So I think fundamentally India is going to have a very strong passenger vehicle growth story. There may be short-term reasons why the industry is not growing today at the pace at which we've seen it grow for the industry. We, of course, like you've seen, had seen strong double-digit growths, and I think it's a question of time before the industry will pick up, and we all remain very optimistic about India being a very strong and big passenger vehicle market, which is a huge enabler to India's GDP, employment, and all of that. Anish,
I think you covered it well.
Okay. There's Puneet Javeri from NDTV Profit about the Thar Rocks opening bookings of 1.76 lakhs in the first hour. That's roughly 2.5 times of what you sold of Thar brand in the last year. Wanted to ask you, will you do an order book recalibration as you did for XUV 700 this year to see the actual order book?
Yeah, we do that, and that's an ongoing process. So what we do is all the bookings that get come in need to be validated with a KYC and so on and so forth as we take that up. So that's an ongoing process that we are following for all bookings that come in. So we do have a process of that kind.
That's about it from online, the questions that has come online. Anyone else would like to ask anything over here? Okay. Thank you so much. Thanks so much for presence today. And if you have not replied anything, you can please write back to us. We'll get back as soon as we can. And there's some refreshments in the adjoining room. You can just, thank you.